Would you like me to give you a strategy that even a baked potato with zero sour cream could use to make money trading the markets? All right, I'm going to show you a strategy that I'm calling the 10 EMA strategy. We're using it in the real life trading, swing trading rooms, and day trading rooms. It's very easy, very effective, super simple, and really, really quick to implement and use. You ready? Let's dive into this video and talk about it right now. You rock. All right, friends and family, here's what I got for you. This is the 10 EMA strategy. What we're looking for is very simple. We are using a 10 EMA on any time frame. We are looking for a bullish candle to close below the moving average or a bearish candle to close above the moving average. Once that happens, we get in with a breakout past that candle. This can be working and this can be used on any time frame. And the more you use it, the more you practice it, you'll really be able to feel, sense, and understand the momentum. Perfect example. Let's look at Tesla here, and we're going to go back in time just a little bit. And we're going to use a intraday level here on a 3-minute chart. And what I'll do is I'll just show you a trade that we took just a few moments ago on Tesla. This is the 10 EMA, and let's look at this trade right now. So the 10 EMA, here it is. This is a bear candle closing above the 10. Now, what you'll notice is this is actually the very, very first one. We had one right here on a 3-minute chart, which we did use, and we did take that trade for a small win. But after that, we had bull candles close below the moving average, so we were looking to short. Right? That was nice, very, very pretty. Secondly, after the trade came down, the short came down, and we traded right back into prior lows, we got a bear candle closing above the 10 on a 3-minute chart. Therefore, entry was above there. Boom, boom, pow, nice entry. There's your stop loss, and you trail the stop accordingly, just like anything else. So that's the 3-minute version. Here is the daily version of this exact same strategy. And again, bullish candle closing below the moving average, you're looking to go bearish. So if I back up, back it up, and come over here, just a few days ago, you had a bullish candle on Tesla close below the 10. You also had a bullish candle right here, close below the 10 EMA. When you get that candle set up, you go, okay, awesome. I'm looking to get in below this candle, stop above, recent candles, recent pivot highs. Next candle that comes in, another bullish candle also closing below the 10 EMA. So that gives you two opportunities to go, all right, if it breaks lower, I'm going to get in bearish. Well, it did. Bang. Now, if you didn't get in on that day for whatever particular reason, you could have done a limit sell to get in on a retest of that bull candle with a stop loss right there. Got filled on the retest. There's your inside candle. And then, holy smoke show, Tesla sells off like a absolute banshee. Now, on a bear perspective, here's a bear candle closing above the 10 EMA right there. Entry would have been there. Stop loss would have been there. Exiting at this resistance at about 1.2 Rs, right? This resistance there or this gap area. Now, if you didn't exit, no big deal. You got stopped out and all is good. You lost small and you were able to play some bearish trades over here with these bull candles closing below the 10. Guys, this is easy. If we go back in time a little bit, here's some bear candles closing above the 10 EMA on Tesla. Bang, 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 bang. Getting in above those bear candles, stop loss somewhere down here, and you wrote it up for a nice win. Very pretty. Let's go use a few more examples. This was a trade that we took very recently on OKTA, Okta. And Okta just coming into present day, backing up the time just a little bit. Here's a bull candle that closed below the 10 EMA. Was there a bear candle that previously closed above the 10? Absolutely. The last one was right there. Notice we never went above that candle. So you wouldn't gotten triggered in. No big deal. Here's a bull candle closing below the 10. Entry there. Stop there. Next candle. Didn't get filled. Next candle. Didn't get filled. Next candle. Haven't gotten filled yet. Next candle. Filled and hit the target all in the same day. Right? You're shooting for a 1.2R win on this particular trade. Or if you're in short, exit with a new low, exit at a support, exit at a level that you feel like you want to get out at. Obviously, we can see that this strategy does not work all the time, every time. Case in point, bull candle closing below the 10, entry there, stop there, would have gotten stopped out. It's okay to get stopped out. What's not okay is to not have a strategy that's easy, simple, fast, and repeatable that works very, very frequently. Just going back in time, fastest thing I can choose. Look at this. Very first bear candle closing above the 10 EMA. Bear candle closing above, bear candle closing above. You're getting in on this candle. Stop loss is down here. Target right around there. Boom. There's a winner. Bear candle closing above the 10. This is over earnings. So I'm assuming you have gotten in there and probably exited the exact same day for a small win. Keep in mind, the more you practice this strategy, the more you'll see a really, really good setup, and you'll start to identify what looks picturesque and what looks really, really, let me wait on this one. Example, here's a bull candle closing below the 10. Notice it was at a support. The stock had already gone down from 245 to 215, and we had a bunch of bear candles in a row. Also, you were pretty far away from the 10 EMA at this particular instance. So you really want to be closer to the 10, interacting with the 10, and have just gotten above or past it. Another perfect case in point, bloop, right there. Bull candle, closing below the 10, gorgeous. And as a reminder, this does work on every time frame. We've looked at the daily, we've looked at the 3-minute. Here's the weekly chart. Let's go to the Qs. Weekly chart on the Qs. The reason that the Qs are selling off so strong is because we have right now a bull candle closing below the 10, and we went lower than that candle on a weekly time frame. The last time we closed below the 10 on the weekly chart was October 4th. We never went lower than that candle, aka didn't sell off. Previous time, bull candle closing below the 10, did not go lower, aka no sell off. Same thing here, same thing here. That was why this was such an obvious, easy, and super sexy signal to make crazy good bear money on the way down. Bull candle closing below the 10 EMA on the weekly chart, first time in forever, and it did break lower, even though it did not the last 3 or 4 instances. Ladies and gentlemen, that's the strategy. Make sure to come over to reallifetrading.com and check out all of our information. I'm going to have all kinds of classes, content, videos, and updates on this strategy because I'm going to be focusing on this exact strategy for all of 2022 to ensure that each and every single one of you make money, use the market to create more cash flow, more income, more financial freedom, and more time with your family. Sound amazing? I love you so much. Thank you for enriching lives with me. You absolutely rock.